Hello, my name is Fan Yang, your technical analyst here at CMS Forex. Today is Friday, November 20th, 2009, and you're watching today's video technical update. Ending the week, we saw pairs such as the euro-dollar sticking to a tight short-term range. The pound-dollar had two downswings, but remains in a wider yet still short-term range. The Aussie dollar is the only dollar cross that still may be in a bullish mode, as this week's decline might just be a retracement pattern. This video is being prepared at about 4:15 p.m. Eastern Standard Time after the close of the weekly session. Starting with the euro-dollar pair, we saw this pair oscillate between 1.48 and 1.5050. Looking back at the daily, we see that even though the pair is in consolidation mode in this short range, we are still in a longer term bullish mode. We see all these different degrees of our speed lines or our trend lines intact. So right now we're bullish, except in the short term we are neutral and consolidating. Now we can't consider the bearish case until the 1.45 area, this support here, is broken. The 1.46 here, if the market breaks below this, it gives us some signal, our first signal for the bearish outlook. But still, the pair could continue to oscillate and basically consolidate before the market decides on a new direction. So once again, we're gonna continue looking at these supports here, as well as this resistance here at 1.5050. If this does break, then we may have another swing, kind of like this, that would aim for the 1.5250 area. Alright, moving on to the next pair. The pound-dollar pair also remained in this range, in the short-term range. However, this 400 pip range is a lot wider than our euro-dollar range, which was around 200 pips. So basically, the pair had two downswings from the 1.6850 area, and now is testing the range support at 1.65. Okay. The manner of this decline suggests that there is a bearish takeover. So next week, this looks like it will break, and if it does, then we would have another test of 1.6250, which is a more medium-term range. Okay. Now we can't consider. Now, if you look at the daily time frame, we see that we have already been in sideways action since the summer. So right now we do see some bearish candlestick combination with a bearish stochastic divergence at this important resistance. So we do have a lot of bearish interest here, and the market seems to be following up in that with that signal. Now, if in a longer term look, you can't really consider the bearish outlook until this area is broken, 1.61, 1.60. Okay, so for now we are still in this range, and next week we may have a chance to test the 1.6250 area. Otherwise, we are still going to be in this range between 1.65 and 1.6850. Moving on, the Aussie dollar pair showed bearish signals this week, but we need to look at the bigger picture before confirming the significance of these bearish signals. A break of this trend line may simply mean slowing of the trend or entrance into consolidation mode, as the underlying trend has not been violated yet. We're creating higher highs and higher lows, so until this low is broken, we are still in a bullish mode. Unlike the euro-dollar and the pound-dollar, the Aussie dollar actually made a fresh 2009 high this week. Let's look at it here. So it came all the way up to 0.94, where the previous high Okay, previous high was here at 0.9330. Okay, so since we're in the 4-hour time frame, we saw a completed head and shoulder here. So we had our left shoulder, right shoulder, and this is the head. Our neckline was here at 0.92, around that area. So after this break, we saw the market continue to decline. And at the moment, we are anticipating this as a retracement pattern. But we'll see. That's our first scenario. Okay, so our first scenario here, since there was a breakout on the downside, we have our pattern projection, a minimum projection at the 0.90. So the market may complete this short-term decline, and this matches the 78.6% retracement area. So we may anticipate a rally from this point, and if it does, we would have a swing projection to the 0.95 area. That's our first scenario. Another scenario, well, actually, a variation of this first scenario is that the market may not need to come all the way to 0.9. The market looks to be reversing now. If it does, then and if it's able to break above this previous 0.92 area, then it's possible that this market may instead reach a little bit higher, near the 0.96 area. Okay. Now another scenario is if the market came back up and this was only a kickback, then we would have a further decline to test the 0.89 area, which is a support, which is short-term support. And if this area holds, then we are basically in a consolidation mode, and no longer if 78.6% holds, then we may still be in a bullish mode. But if it doesn't, instead this 100% retracement area holds, then we would be in a ranging mode. A ranging mode would have a target at 0.94 instead of 0.95. There is a third scenario, which is that the market will continue to decline and break below 0.89. Then we would consider our bearish scenario and then start stalking the pair as it declines further. If so, we basically have a completed double top, even though the second top would have been a little bit higher. So these are the three possible scenarios and their variations for the Aussie dollar. We'll keep our eyes open next week and monitor these levels here, 0.90, also here at 0.92. Okay. All right, so that wraps it up for today. Once again, I'm your technical analyst here at CMS Forex. Remember to check out fxtimes.com regularly for your latest news, analysis, as well as educational live events. Have a great weekend, and I'll see you again next week. Bye-bye.